In the international market, all eyes are on FOMC meeting outcome. Market is pricing in 75 basis points or higher rate hike. Scenarios. Scenario number 1. If the Fed hikes rates by 50 basis points, expect yields to rise much higher as market participants will believe Fed has missed the plot and there is no easy way to tame the inflation. Scenario number 2. If the Fed hikes rates by 75 basis points, bond yields will be range bound with 10 to 15 basis points movement in either direction. If the Fed hikes rates by 100 basis points, bond yields would calm down and rally up to 20-25 basis points with an anticipation of inflation control measures are in place and Fed is committed to take strong actions. US 10-year is now trading at 342 versus 2-year Treasury at 337, almost flat yield curve. In the crude oil market, crude is trading at $121.80 per barrel. Short-term range for crude is 119 to 124. In the currency market, dollar index or DXY is at 105.18. 107 is on cards based on the Fed outcome. Today's range for dollar index 104.85 to 105.88. USD CNY or Chinese yuan is at 672. USD INR with an intraday low of 78.07 closed at 78.04. Resistance at 77.85, support at 78.30. In the domestic market, short sellers had covered their partial positions as CPI was in line with expectations because of the base effect. Knight Research base case expectation from Fed outcome is US yields have risen too sharply and a correction in yield is warranted. Indian bond markets, where a 5-year paper is trading at 730, are lucrative enough for AFS and as the M2M's mark-to-markets will be limited. 574 2026 closed at 730 versus 734, a gain of 4 basis points in the shorter end of the curve. 654 2032 closed at 758 versus 760 and 667 2035 closed at 771 versus 772. Trading range 654 GS 2032 trades at 754 to 762 range. Knight Research view: accumulate 5 and 10-year papers. Today, we expect US Fed FOMC outcome will be cheered by the US market, which would bring some joy to the Indian bond markets as well. AFS HFT should not carry anything above or beyond 5 years maturity as the yield rise is certain. But a 5-year at 730 is lucrative enough even if the yields are to rise by another 20 basis points from a T-bill versus GSEC M2M perspective. Non-SLR category, start parking your excess short-term cash into the mutual funds. CPs and short-term 13 to 24 months bonds still remain our favorites. That's it for today. See you tomorrow with a new episode from Night Snippets.